All right, let's get these time charts to line up. All right, come on back up there. Now it fell down, so yeah, in that same resistance area. Key to know. Now over here on the main chart that I use, it's fallen below. Now it's going to take some time, unless things got so bearish that we'll just go short. But again, let me see what would have to happen before I go short. Here's the 5-minute chart up here. We would have to see everything get on the other side of the momentum lines, and it's going to take a minute. All this has got to do here is close a trend line break even over the moving averages, but we still have that resistance area, and now it's starting to kind of go sideways. So that's where people get chopped up. The guy that showed me this had some major drawdowns because of trading and choppiness, and we all do. And it's just not smart, because I want to take a trade. Being bored, have to trade. I have to trade. Come on, get back up there. Close above the moving averages. Let me see you consolidate under that box and then push through it. Push through it. See, right now, I would be tempted to take the trade off of the 20 because there's still room to get back up there. If it comes and touches the 20 and closes above it, I would be tempted. Is it the smartest since I know that it's going sideways? No, it's not the smartest. It's not the smartest. I would not say this is an A+ setup. I would say it's a B+ setup. And especially if we get a trend line break and a Fibonacci level that's being respected, then it becomes a stronger. It didn't quite come down to the Fibonacci. It did break the trend line, but look, it's coming right back down. Fibonacci would be here. That's where the 20 EMA is at. It's above all the moving averages on my higher time chart, 1,000-tick chart. Let's see what happens here. It's fallen below the trend line. It's coming back into Fibonacci levels. Now it's pushing below the moving averages. So that's a no-go. It's a no-go. I mean, I've got to stay disciplined. Okay, this is it for me, man. I've wasted too much time. I got to start making some money, and and the only way to do it is to stay disciplined on what I've learned. This is not a video game anymore. I should be making bank right now. If I don't get a trade today, I will be okay with that. I'll kick myself because I didn't take my 1-to-1. And I will learn from it. It's a 5,000 tick chart. It looks good. It's sideways though, but it's above all the moving averages the way you want to see. The 5-minute chart is trying to get all these moving averages. It's pretty much stagnant, but the moving averages have all crossed in proper order. They're all above one another in sequence the way they're supposed to be. So that's good. That's a good sign. We could see a breakout. We could see a breakout right here. Or it could be trending down. A change of directions always starts with some kind of Fibonacci correction. A true change of direction. Almost always, I would say quite often. Boring. There's nothing to do here. There's nothing. There's no trade in either direction. For this system. I'm sure somebody would probably think shorting this right over here is a good idea, and I don't blame them. There's different ways of trading. But this is a momentum trade style here. I mean, I'm only going to trade till 11. 90 minutes. I could have had my profit for the day already closed down and been done. Okay, this is my first day trading this system. First day, learned it yesterday. I've already had my eye on moving average strategies, and I've been very familiar with them, and I've seen them work really nice. But this guy gave me a new insight that triggered with me yesterday, and today I'm practicing it for the first time the way he showed me. And I could have already hit 1-to-1 profit on there. Most of the time, you're going to be waiting. This is a waiting game. This is like hunting, man. Hunting. You're hunting for the perfect kill. If it pops, I'm going to take my 1-to-1 and be grateful. I don't know. Boring. Boring. I wish I could play some music. Let's see what Top Step's doing real quick.
$1,000, right?
Yeah.
Where's it
in the big
5,000?
contract.
Yeah, in the
Well,
big,
it's
right? It's ridiculous.
no, it's $5,000.
25,000. So it's
Yeah.
$25,000 range. So be very, very careful, right? Have a stop, and just protect your accounts right now. These markets are extremely volatile, and we have a number coming out Wednesday, right? So just be on caution.
I do have other strategies, but I really don't want to practice anything but this today. One of them is a pivot level liquidity sweep strategy that I like a lot, which once it sweeps and closes green, you got limited risk and target is the next pivot level up. I just don't want to get sidetracked and trade anything else right now. But it's very tempting when you see other opportunities with other strategies. I do want to eventually be flexible with trading momentum and consolidation. This is consolidation. There's no momentum play on this. So the only thing we can do if we want to trade is to trade the structure levels. And here's a sweep. Let me see if it closes. Let me see if it closes green.
Order filled.
I'm going to take it. What the heck?
Order submitted.
Stop is right underneath the same. It's very small.
Order filled.
Very small. It stopped me out. That's okay. It's only like 3 ticks. Risk reward was good on that. Here's another sweep. There's it sweeps the bottom. Does not close back above. Well, I tell you what, if everything goes down and we get 1,000 on 1,000 tick, all the moving averages are down underneath and everything expanding downward in proper order, then we will go short. But that's a long transition because you need all the moving averages to rotate in proper order. These are all in proper order. The fastest and the slowest are all in proper order. There is nothing crisscrossed in the wrong direction. If we get that on the exponential chart, then we will go short. We will. I have to. Here's another liquidity sweep. Let's see what happens here. Just keeps right on going too fast. Too fast. Can't take that trade. Meanwhile, the moving averages are slowly rotating under. We still have the 50, the 100, and the 200 that are all bullish still. Everything's got to cross down. Everything. That is my rule. That is my rule. Did that sweep? No, it did not sweep. Came close. Came close to sweeping that box right there. If it swept and closed green, I would have gave it another shot. These are very, very cheap trades. It's worth doing. You usually get 3, 4, 5 times your risk. So they're worth taking. Definitely worth taking. But I'd have to wait for the sweep. Some people are like, hey, it's in support. It's in the support level. You should have took that. Maybe that's the way they want to trade. Good. Sure, go for it. I personally will not take it if it doesn't sweep the liquidity first. That's just me. Just me. Okay. Now we're waiting on the 1,000 to continue down. Price has got to really, really go up to switch those moving averages back to the bullish side. And there's all kinds of strategies in here that people can trade. They're probably saying, oh, well, you missed an opportunity here. There's different ways of trading. Yeah, there's different ways of trading. There's an opportunity right there. There's something up here. There's structure coming up with a 50% pull up. There's going to be something up there that happens, whether it succeeds or not. But sure, we could take a look at it and observe it. I like to watch. I like to watch. It's right up into that. Yeah, that's a resistance area. Sure. Now, you could say it's already turned red. Short. Keep your stop there. That's one of my systems, but I'm not practicing that today. I really want to discipline myself to trade what I'm trying to trade today. So that's why I'm not paying attention to anything else. So there's all kinds of ways I like to trade. And I've made profit on all of them, but I really like this one today for some reason. You know, the problem is if price doesn't let me do it, then, you know, you can't force price to do what you want. You might have to try something else. It's understandable. We're not getting the momentum play today. So we're getting discount levels and liquidity sweeps and consolidation opportunities. And that's okay. I mean, I'm thinking about shorting this thing, but thinking about shorting it, definitely. Should have did it up higher. See, I didn't make a commitment to actually. It looks like I'm going to have to just switch strategies today. This is not giving me momentum, so I can't force it to do. And that would have worked perfectly. Look at that. Put it on break even, and you're in. It's done, and you're done. You're probably out by now, but it was worth a try for sure. But with gold at all-time highs, being it's already above yesterday's close and yesterday's high. It's in no man's land to the upside. I really want to stay focused on momentum to the upside. It's very difficult to have the mentality to change strategies just in mid-flow. Like, my mind is set on one thing. All my rules and all my mind and all my motivation is set for the strategy that I want to practice, and then just switching to a different one I guess you can do that, but there's a short opportunity coming up here. That was the short, 50%. It came right up into the golden zone and closed red. First red candle. Short. It's already hit 1-to-1 to the downside. Came up 50-60%. First red candle. Short to the downside. That's the way I've been trading on my channel here. If you go look at my videos. But I want to try this. And we may be getting it to the downside if these moving averages go a little bit more. May see another Fibonacci right here to the short. May get another one. Red candle. Let's try it, and if it doesn't work, it doesn't work.
Order filled. Order submitted.
Break even. Go, 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 go. Go down, go down. Go down.
Order filled.
I only broke even. It didn't keep going, so that's fine. Didn't lose anything. It was worth a try. First red candle off the Fibonacci zone. You short. If I stayed up higher, I'd still be in the trade, but I I don't like losing money. Breaking even 10 times and hitting a winner once is profitable. It's profitable. And if I would have stayed in it at the top, then I would still be in it, and it would have made it. And that's fine. I don't care. I don't care. Observing the Fibonacci rules and getting into the trade, I noticed that I can get into a lot of really good trades, but managing risk is the key. You can find good entries, guys. You can find good entries. Managing risk is what separates the boys from the men. That is for sure. Okay, there's a liquidity sweep. Oh, is it too fast? Did it go too fast? Oh, come on. Buy at the ask. Let's just try it right here. Let me get my risk. I don't have my stop losses in place, man. Okay, go. You ready?
Order filled.
Okay. Stop is right underneath it. Let me see if I can get a 1-to-1 on this thing. Break even as soon as I can. Ooh, go. Break even. Hit target, hit target, hit target. Hit target. I'm over break even by a couple of ticks.
Stop filled.
That's okay. I don't care. I don't like losing money, man. If I get a good entry and I can break even, that's what I do. I'll break even 1,000 times if I have to. It's okay, because sometimes it just takes off and you can trail that candle by candle by candle, and it is a 10, 12 times risk. Once it sweeps liquidity and closes green, boom, it did actually pull back to Fibonacci zones and then get in. That's even more reliable. Just a liquidity sweep and a bounce, it's higher risk to just jump in it. But after it comes back down for a double test and starts to go back up, that's a better probability right there. So that's I knew this trade was at least going to get me to break even. I believed anyway. There's no guarantee, but I knew in my heart, at least I can break even on this. That's why I jumped in it. Oh, gosh, I got to pee. More Fibonacci. First red, that's a big red candle, though. I don't like the big red candles. I don't like it to be that big. Here's a retest, though. And I like to let it come up and reduce my risk here so I can sell it higher up to the pivot level instead of jumping in way down here. Let it come back up into Fibonacci levels. So right here would be a good higher up place to short it, because then my risk is less. My risk is less. It's only like $12 or something. And even higher if you let it keep coming up. That's like $10 risk. That's a good, it's kind of good to try this, actually. That's almost just a 2-tick risk here. I almost pushed the sell button, man. Oh, my finger was on the trigger. Yeah, that's the higher it comes, the less you're going to lose. And I've already would have hit 2-to-1 on that son of a gun. Observing price action and paper trading in your mind is the way to get better at trading. The more you see it, the more you see the reality of it, the more confident, and then the quicker of execution you might pull the trigger faster next time. You're seeing how it works over and over and over and over again. Exponential charts are the way to go. Have a higher time chart agreeing in direction, and let the setup take place on the lower time chart. See, it would have stopped me out, but I would have already been out. or I would have I probably would have moved my stop to break even. When I say break even, I mean plus a couple of ticks. I want it to cover commissions. Well, it looks like I'm going to have to trade this way today. Definitely got some more short side opportunities coming up in this thing. Unless it goes too far up. There's a good spot. Red candle. Let it. You kind of want it to. It's near the trend line, but it's not. You really want it to poke through and then turn red. Those are better. Those are always going to be better. Doesn't matter if you miss it. Do what you want to do, but you want the fake out breakout. Those are better. Those are always going to be better. Just like this liquidity sweep fake out worked perfect. And then we had the short once it came up here. 2-to-1 if we would have got in at the right spot. If I would have pushed that button, boy, that would have been nice. See how this broke the trend line right here, poked up over the trend line. Look at that huge drop. Oh my goodness. I got to draw this better. So the new trend line is here now. Okay. It's a good way to get messed up if you don't have your technicals proper. That's the new trend line. Poke through. Let's see what happens. Keeps going. It's not going to be interesting anymore. Close. If it goes down too far, I'm going to have to wait for it to Fibonacci up a little bit. Give me a better price. It did close below it. This is where I don't like how it's looking on this chart. This is a scary spot. Now it's closed back above it. So now I don't know what to do. I would have preferred it to close down far enough, come back up, stay below the trend line, into Fibonacci, and then start to go back down this way. That would have been better for me. I don't like shorting it now. No, thank you. It might, it might be a double top though. It might give us something like a 1 try, 2 try, and then come down and then look for the Fibonacci. Always wait for that pullback. So there's your 2 tries to break out. Looks like it wants to go now on the 1,000 tick chart. Looks like it wants to keep going up. See, it tested back down into the trend line. That's what you want to see for bullish. Breakout, come back, test, go back up. If it keeps going, we're going to want some Fibonacci. We're going to want, then boom, catch it when it pulls back, bounces off the 20. But we don't have a very strong agreement over here. These are all still underneath. You want them up here. That's the strictest rule I have. It's a very strict rule. Will I break it sometimes? Yeah, probably. There's a pullback. There's a pullback off the 20, off the trend line. Let's see what happens here. Come back a little lower.
Order filled.
I'll try it. Oh, it got me in a terrible fill. Oh, this is a horrible.
Stop filled.
Yeah, that was bad. That was bad. That was bad. If I would have got it down lower, maybe I'd have been happier. Did it break that pivot? Yeah, I would have stopped out here too. So this is very choppy right here. If we get a couple of pintails over here on the 1,000-tick chart and it keeps closing above the trend line, I'm going to give it another shot. But it's got to close on the 1,000-tick chart with a pintail, and it's got to close above the trend line. There's the pintail. Let's see if it closes. Oh boys, if it goes too fast, it's always a possibility that it's going to go too quick. If it does, then we we go back to our momentum trading and we wait for a pullback to the 20 EMA. Excuse me. All right, I'm liking what I'm seeing. Let it close like that now. There it goes. It closed. Now let's wait for it to pull back to the 20 here. We got a ways for it to go up to that box up there, so that's not a problem yet. Let me get a Fibonacci pullback right here, and I'll take it. I will take it. If it goes too fast, it's going to go too fast without me. Come on back. Come on down into the zone, into the buy zone, into the pivot level. Come on. Right in here. Bounce off the 20. Come on, bounce off the 20. There it is. There's hitting it. Keep going back up now. Close back up over the top of it right here on this candle. Close back over the top of it. I'll give it a shot. I'll give it a try.
Order filled.
All right. It might not work. If it does, it does. It doesn't, it doesn't. But that's what I'm looking for. If this doesn't work, I'm going to close down for the day. That's fine with me. I'm not going to, it's too unpredictable. I might be out of sync today. I'm down $36. And then I don't want to lose any more than that. I don't like losing money. I'm going to go break even here in a minute. Keep going. Keep going. That's probably 2-to-1 already. I'll go on break even. Don't forget, break even's the best way to do it. Keep going. Keep going. Right up to the red box, really. I mean, there's nothing holding you back. Keep going. I could trail candle by candle. Or I could just let it hit my target or wait, put it up here where the red stuff is. Keep going.
Order
taking
filled.
it. I'm taking it. I'm taking it. I'm positive now. I'm up $9. It's better than being red. And plus, that trade down here was silly. This trade right here did not close green. That's why you wait for it to close green. That was my error. I'll watch this video later. It's my video journal. It helps me remember what I did right, what I did wrong. And everyday live streaming on this channel as long as I'm not at my other job. Monday through Friday, if I'm not working my other job, I will be live streaming. So if anybody watching this video wants to come hang with me and trade with me, I'll see you then. I'm closing this thing down today. I'm back above green and I'm okay psychologically. And it was a good training day, good learning day. God bless you guys. I'll see you next time.